Hey everybody, Jim Malone here, coming to you live on Dallas Trading Floor. And hope everyone is having a good day today. I have restart the TikTok there. We go. There we go. We should be live on TikTok as well. And for everybody out there, we are live on Dallas Trading Floor, on YouTube, Twitch, Periscope, TikTok, and Facebook. So we're all on those things. And by the way, we have just recently started a podcast, and I'll have some more information about that later on. But that is being put together right now, and we're going to be on iTunes, Google Podcasts, and a number of other platforms as we move forward here. But currently, it is up, and you can, if you're interested in the podcast, it's www.anchor.fm, and it's Dallas Trading Floor. So there, without further ado, let's get into some of the slides. Well, it looks as if we are in a rotation. This is an interesting thing. The techs are down, and I think that we're going to see some sell-off in the techs. That seems to be what's happening. Microsoft has moved lower. Tesla's moved lower. Google, which is Alphabet, of course, that's moved lower. And I was stopped out of Facebook. I'm out of Facebook as well. I do have a few things, but in general, the tenor of the market is changing. Even though we're in a confirmed uptrend, I think we have to be careful, because I do think there's a rotation out of some of the tech stocks. So if you have profits in your tech stocks, now is a good time to sell. Now is a good time to sell, and then wait, because we may get a correction here. We may, we are in a confirmed uptrend. We did have a fall through day last week, but it looks as if that is going to change somewhat. So I suspect that we're going to possibly go back into correction based on some of the slides. And I want to kind of give you a heads up on some of the slides. Here they are, basically. Even though we are in a confirmed uptrend on the NASDAQ, as you can see, we are off on the S&P 500 and the Dow Jones, and so it is basically down all over. We're pulling back to the we're pulling back to the line here. As well, as you can see, we've pulled below. We tried to make a breakout, but it looks as if the S&P is going to move lower now, and it possibly will move below the, it possibly will below the 40-day average. And then, of course, we have to be concerned if it pulls back below the 200-day. That's the black line here that you can see. So what's happening right now is that we do have a pullback in the S&P, and we have a much larger pullback in the in the QQQ Trust, which is which is basically the NASDAQ 100. So I want to show you that real quickly. We've had two sell-off days. I suspect we have a failed breakout here, and I suspect we're going to have another one tomorrow. The key level on the QQQ is about 275 to 280. So I do think that we're going to move lower than that. And I do think we're going to move lower than that. We did have some high volume, so that pretends that in the near future we're going to see even more of a pullback, I think. And I think as the election results sink in, I think that we're going to see we're going to see a lot more pullback. But for everyone out there, I would really appreciate it if you would go to the website, www.youtube.com/Dallas Trading Floor, and definitely, if you haven't already, and this helps me out a lot, hit that like button. So I appreciate that very much if you can do that for me. And if you're watching on TikTok, you want to see the charts that I'm showing, basically you can just jump right over to the you know, right over to the to the charts. Here are my current holdings, and you can see there's a bit of a change from yesterday. I'm still in Cloudflare. I'm off a bit there, down to about 60. I probably will be selling out at the $60 level on Cloudflare. I'm also down a little bit on Greystone. Bitcoin Trust is a little bit surprising to me on this one, but we're off a little bit as well on that one. Form Factor, I'm still in. I'm actually up on Form Factor, which is interesting. It's just about the only thing that is up. I'm off on ResMed and Enphi and Palantir Technologies. I will probably be selling out before the earnings on Palantir. So that's just something to kind of be, be apprised of that is going that way. So just kind of wanted to give you an idea of how my small portfolio is trading right now. And I'll just pull that up in just a second here. I changed the resolution on some of these monitors so it's a little bit easier to see than it was previously. So hopefully you can see, if you can see some of that. But as you can see, I've moved back into cash. I'm about 18% in cash. I do have a position in Cloudflare that probably will be, I'll probably be moving out of that. My largest position is in Palantir, and we've done probably the best in that. But remember, we're coming up on earnings, so I kind of wanted to kind of show you that as well. So we're coming up on earnings, and I probably will be out of that. Currently, with my positions in the small portfolio, and by the way, you can get a link to the small portfolio. It's easy. All you have to do is go to www.dallastradingfloor.com, and I'll show you that on the screen in just a second so you can get that link. But currently, I'm up on most everything, with the exception, of course, of Enphi. I'm down on Enphi, and I've sold everything else. So as you can see, unfortunately I did get shaken out of I did get shaken out of Snap. Unfortunately, I did sell that. Unfortunately, that missed, and I'm out of that. But I do think that we're going to be pulling lower on the overall market. So I just wanted to be very upfront about that. And by the way, if you do want to take a look at, and you want to get a look at that small portfolio, it's super easy to do. Just go over to my website, www.dallastradingfloor, and there is a little bit. There we go. It's right down here, first and last name, and then email, and just hit the submit key, and you will be in the list. So you will get the link to that. So without further ado, let's go to some of the questions. Thanks for holding on here. And let's see. Okay, so we have from YouTube. Jim, on your small portfolio, net current price formula stop working. Huh. Okay, keep showing 78 at all times. Okay, what you have to do on that small portfolio, I'll just kind of give you an idea of that. Maybe that seems to be a problem. So let me see if I can fix that for you. I don't know if that is wrong. So let's see net. Okay, no, at 5078. So I guess it has stopped working. So let me go over to the symbols here and see if that is working there. So let's go up to, where is it? Cloudflare, net.net. Oh, goodness gracious. Let's see if I can find it in there. Okay. DraftKings, beef. Well, you know what? Where is that? Where is it? Well, I'm going to have to fix that, unfortunately, because it is probably lower. So let's see if I can just change it on the on there in general. So let's see if I can get just the Cloudflare there. So let's do that. Okay, cash. Let's see. Where is that? Yeah, there we go. Okay, for some reason that is not pulling through properly. So let me go ahead and pull that correctly. So I appreciate that. Thank you for bringing that to the attention. So copy that over, and I'm going to put that right here on, let's see, on the correct account here. So let's do that and get that in there. So there we go. All right. So this should change it up. Here we go. Come on. There we go. All right. And is it moving? No. Come on. There we go. Let's paste. It's not letting me paste. Okay. So let me see if I can. That's not letting me, not letting me do it. Okay, that's a view only, so I have to go back to the other screen. And I apologize for this difficulty technically. All right, come on there. And hopefully this will rectify the problem. Well, maybe not. Well, I guess not. All right, let me see if I can copy that into place. And this seems to be the issue here. There, no, 16. That's not right either. I apologize. That doesn't seem to be the right answer either. Okay, well, darn it. All right. Darn it. So let me move this formula up. Okay, sorry about this, folks. Should be much easier than this. All right, and let's see if I can make that change. Hopefully that will, no, it doesn't work either. So I apologize for the small portfolio. I will have to fix the problem, and that's not available. I apologize on that. I have to fix the problem. I have to fix the problem on that. But thanks for bringing it to my attention. So I'm sorry about that. Jim, we have double up stocks, volume down, volume. Yet the market is hardly moving. What does this mean? Okay, let me tell you what this means. It's very simple. There is a rotation out of tech into value and other things. So what's happening is we're moving out of the QQQ type of stocks into the DIA type of stocks, the diamond. Just want to show you that real quickly on the screen. You know, what is going on? Why is it not, why is it different than it normally is? Well, let's look at the diamond, the DIA. This is the Dow Jones 30. Okay, and if you'll notice, the Dow Jones 30 is, there we go. There we go. Super. You'll notice that it's up. You notice how that you notice how that's up. Now, if we go over to the QQQ, you'll notice that it's down significantly. Okay? So, what does that mean? What does that mean? That means that people are selling the Qs and they're buying the diamond. Okay, so what is that? How does that affect us? Well, that means that stocks like Microsoft are moving lower, and this is a chart of Microsoft currently. All right, you notice how Microsoft is moving lower now. Okay, well the question is, where is that money going? Well, they're selling Microsoft, and they're buying stocks like Boeing. And as you can see, Boeing is going higher. So here's what's happening, folks. The stocks that are in the QQQs are being rotated out of into the stocks that are in the Dow. So what we have is we have the Dow stocks going up and the Qs going down. So take a look, for instance, if we have a stock like Alphabet, which is GOOGL, okay, Google, there we go. You'll notice that it is moving lower today. There we go. It's moving lower today. Whereas a stock that is in the Dow Jones, like Disney, is moving, actually it's moving lower. I apologize. But a Dow stock like JP Morgan should be up. So let's take a look at JP Morgan. Yeah, it is up a little bit, pulled back a little bit. But you notice how JP Morgan is up. Here's why this is happening. Because of the possible Biden presidency, we are looking at a movement out of tech into the banks and healthcare. So that's what we're looking at. That's the market. That's looking at the market. If you'll notice, all of the tech stocks like BABA, BABA, that's taking it on the chin today. Take a look at BABA. All right. Okay. What does this mean? Why is this happening? Well, the reason that it's happening, very, very simple. we are going to see if Biden becomes president, which it looks like very, very possible that's going to happen. It looks as if we are going to maintain the shutdown in this country. And if we do, of course, that will mean lower retail sales. And it will mean lower exports from China because we just simply won't be able to buy as much. And that's part of the reason that BABA is selling off today. So there is a rotation from the tech sector into the from tech into into the Dow stocks, into the Dow 30 stocks, into the more value-oriented stocks. So let's take some questions from TikTok. Thank you so much for waiting here. Farted against smells, but okay. Well, what do you think about NEO? Well, I, in this kind of environment, I think the market is changing. Let's be careful with NEO. Right now, I know that it's pulling off as expected, as expected. I think that, you see NEO, unfortunately, and even though it has a relative strength of 99, now the reason it says 99 here, well, that means that it's in the top 1% of all stocks, but for the year. So not necessarily for the short period of time. So NEO probably has topped. I think we can be pretty confident that that's happened. So I think we're going to get a sell-off in NEO. So if I were looking at this right now, I don't think it is a good time to be in NEO. We'll see if the market changes direction back to an uptrend, but I don't think that's the case right now. Okay, I bought Tesla, AMD, and its stocks went down sharply today. Your advice: sell right now. I apologize to. I don't want. I hate being the bearer of bad news here, but here's the thing: there is a secular move in the market. The market is moving from the tech stocks into the value and the old economy stocks. Okay, so this is what they call a rotation. Everybody is going to take their profits in Tesla, AMD, and JD. These are all going to go down further. So let's take a look at JD here. And JD was setting up very nicely. This is just the result of probably the election. Yeah, you can see it's pulled back. I think it's starting to sink in the fact that Biden is likely to be the next president. And that if that is the case, the market will go lower. Almost guaranteed it will go lower, and that's what's starting to happen now. So we want to be careful in the market, at least for right now, and we want to basically, if anything is down 7%, I think it's a good time, possibly, to sell it. I would, and I definitely have been lightening my positions up as well. So right now, not so good. Tesla, Snap, and NEO, these are all down, by the way, today. So let's look at Snap. I was shaking out of Snap myself earlier today, and I did have a position in Snap. It's pulled back, way back. And now you see people, unfortunately, are starting to take their profits. It's fallen through the 21 exponential. I suspect it will be down basically to $30 probably by the end of the week. That's what it's looking at, $2.80. We have a sell-off going on, unfortunately, in the market. So not a good time. Let's look at Tesla. I still am, a Tesla bull, but I am out of Tesla right now. I got shaken out as well. And I'm waiting for a time to get back in, but it's pulled back as well. It's pulled below the 40-day average, and this is, when it pulls below that, we don't want to touch it until we see it turn higher, and it does. It definitely is not looking that way. So right now it is. Okay, come on there. There we go. Right now, as you can see, that is the trend for Tesla, and it's not up, unfortunately. So what can we do in a situation like that? Well, there are some alternatives, and I just kind of want to put out there some of the alternatives that you might want to consider. Let's look at the SQQQ. This typically shorts the, and it's up today. It's up slightly. I believe that this will do probably fairly well, but here's the thing. The SQQQ isn't going to give you all that much leverage just because this is a sell-off of the market, but it's a different kind of sell-off. It's a rotation out of tech into more of the other issues. What I would recommend in this kind of situation for a sort of a hedging is looking at the diamond. This is the the Dow ETF, and I think this one will do fairly well, and that is the diamond, as you can see. So it has moved up today. Let's look at the weekly chart. Let's see if there's any entry point there, and I do think that there might be. Okay. So we are, the diamond is something that you might want to look at. It's called DIA, and that's sort of where the money is moving. It's moving from tech into the old tech, which is of course the Dow Jones. All right, so let's see. UNH and Han, should I go for buy points, please? Cheers, thanks. Okay, well, that's a good. United Health is part of the Dow. So that's a Dow stock. I think that should do well because it does look like, that the healthcare should do fairly well in this environment. Yes, and it's moved up nicely. Okay, let's look at it. Increasing fund ownership. Checklist is good. Okay, so basically, UNH is good. I have to say this is probably the best of the two, but let's take a quick look at HON, and that's the defense stock should do well in this environment. Yeah, Honeywell, it's up significantly. Okay, this makes sense. Of course, the defense stocks, there's going to be rotation out of tech into some of the defense stocks. So Honeywell definitely would be the one I would go for in this rotation. It looks as if we have a pretty good checklist. Yes, 6 out of 9, and we have excellent fund ownership. Okay, well, it's a little bit off, but yeah, this is going to be where it's going to go into some of the defense stocks. You might want to also look like Lockheed LMT, which is Lockheed Martin. Yeah, there we go, Lockheed Martin, and Lockheed's up today as well. It's also quite an expensive stock, but it is moved. It is moved up above the 59 line. So there's going to be some movement into stocks like this. Let's look at the checklist. 5 out of 9, still not really where you want to be. I think Honeywell is the better of the two in the defense area, but I do think that defense stocks will do fairly well in this rotation. In this rotation. So that's very interesting. Tech stocks are suffering big time. Any recommendations for banks, travel related? Okay, here's the thing. I wouldn't be in any of the travel related ETFs as well, and the banks are very weak as well. But I do like the defense area, and that's Honeywell, or I think Raytheon as well would be good. I think RAY, is that for Raytheon? Let's see if no, it's not supported. Okay. I don't know this. I don't know the symbol on Raytheon, but there is a movement out of tech, and I think that's going to continue. There's a lot of profit taking that's going on right now, so there you go. Okay, hi Jim. Non-tech ETFs. What would you recommend? Well, gosh, the defense area is going to be good because I do believe because of the election, we shall see some pickup in that area. As some of our agreements fall apart in the world. But let me see if I can get Raytheon. Okay, I'm going to put defense ETF. Hold on. All right. Okay. Let's see. Let's see if I can give you a good idea here. You know what? There is one that's pretty good. It's the XAR. Let's see how that looks. XAR, and that is it's up today too. This is probably the one that would be the best for movement out of tech. Would be into this one. It's called the XAR. It's the S&P Defense Aerospace and Defense. It is up today significantly, $10 a share. So this is where the rotation is, and the RS line is up. So this is one you might want to consider. The XAR is the one that you probably want to consider on that because I think that's where the rotation is going to go. It's going to go to defense and aerospace. That would be more than likely. Lost a lot of me. Ooh, I'm sorry to hear that. That's not good. Snap. My DCA is 41.89, and Snap is holding 21 days sell at a loss. You know what, Brian? I would anytime. Here's the rule that I follow, and I don't. I know you're probably not going to like to hear this. I would sell it. I would sell half my position and take half my position off the table. And the reason is because we're in a major sector rotation right now, and it looks as if, due to the election and due to the fact that we may be in a contentious election here. Who knows? I mean, I think that Biden will be the president, but I do think that there is some contention there, and so there's a movement out of tech. There is going to be part of the reason that there's so much movement out of tech. Say, well, why would that make such a difference? Well, the reason it makes such a difference, I believe, is because we're going to see tax rates go up significantly in this country in the new year. That's potentially what everyone is said. And if that is the case, then with interest rates, with that happening, with tax rates going up, there's going to be a lot more interest. There's not going to be as much interest in growth stocks. Simply because they just won't be in the return there. So a lot of hedge fund managers are probably going to be taking profits in their tech stocks, like the Alphabets, like the Googles, where they're going to sell those off, and they're going to wait to see if there's any bargains in the other. That's why there's a rotation going on. Even though the overall market isn't changing, the character of the market is changing, going from tech into rotating out into some of the more safe stocks, the Dow stocks, that have gotten beaten up. And remember, these Dow stocks are very much down. So there's some value in the Dow Jones. I mean, there's some value in some of these Dow issues. So you're going to see that kind of movement away from growth, in not necessarily to value, but into that thing. So this is kind of a safety play that you could make on that potentially, and that is into the S&P Aerospace and Defense Spider, which is the XAR. So that's a way to look at it. Who knows? I mean, who knows if this will be... Okay, where do you see Peloton going tomorrow? Well, I'm lightening in my position in Peloton. I have a $13 sell order on my Peloton, most of my Peloton stock. I did sell some Peloton today, took the gains, and I now have a $13 sell on it before earnings. I'm going to sell Peloton before earnings. As you know, it's going through earnings. It's better to possibly take your profits now and then see how it goes rather than going into earnings. So I would be a seller of Peloton going into earnings based on kind of what's been going on here. So let's take a look at BABA. BABA, of course, big sell-off, of course, and that depends very, very... the problem with BABA is it's not so much something happening in this country, it's something that's happening in China. They have decided that they are going to start regulating BABA a lot more, and so it is likely to be less profitable than it has been in China. So that's one of the reasons that BABA is selling off. This is one of the difficulties, unfortunately, with some of the foreign stocks, is that there's a lot of things that you can't control. Well, it's true on every stock. A lot of things you can't control, but they're going to re-regulate Alibaba in China. So that's the word there. Jack Ma, who is the CEO of BABA, he is increasingly under pressure to divest his holdings in BABA, and the government in China wants to possibly move into that. So there you go. Jim bought $50 calls. What calls would you recommend? Well, right now, I think that, right now, I think calls are probably not the place to be. I'd be a seller of calls right now, but I probably would not be a buyer of calls. I would definitely be a seller of calls. I'd be definitely a seller of calls. I did close a call that I had on Tesla for fairly good profit this morning. So I would be a seller of calls right now. Is Berkshire Berk B a buy? You know what? Berkshire B is really an insurance company, and I'm not so sure that's really a safe haven, because I do think that they're going to have a lot of trouble getting the kind of return. But let's take a look at the chart, because I think that's important. Let's see. BERB. BRKB. I'm sorry, BRKB. And of course, this is, this is Berkshire Hathaway B shares. There are A shares, but they're never quoted because they're so expensive. It's up today. So that's excellent. It's got a rating of, unfortunately here, it does have a relative strength of 60, but it's moving up. So remember, this is for the year, not for the time period of time. Berkshire should probably do fairly well in this kind of situation, but unfortunately, it doesn't have quite as good a rating as I'd like. We do have a lot of funds in it. I do think that it may do well. Their earnings have been lower, as you can see. They were off basically 30% down. Their earnings their earnings surprise was 9% to the downside. They're going to have a lot of trouble making their numbers unless. So I'm not so sure that Berkshire is the place to be. To be honest with you, I'm not so sure that Berkshire is the place to be. So I can't really give you that. Okay. When a chart says it's bullish, but then it goes down throughout the day, does it still remain bullish? Well, that depends on your viewpoint, I suppose. Typically, a day will not make a trend, but basically that's why Jorge, when you're looking at a chart, you want to start with you want to start with a weekly chart and look at that. So a bullish chart is one that obviously is moving up, but there's various different bullish charts. If you're interested in chart reading, I highly recommend possibly a book. Let's see if I can pull that up here. I've been having some issues with my technical here. Let's see if I can get that up. Okay. So here we go. And I'm pulling up right now a copy of Dallas Trading Forum. This is sort of how my website looks. If you really want to get really good on chart reading, I highly recommend this particular book on the Learn to Trade bookshelf. It's this book here. It's How to Make Money in Stocks: A Good Winning System, Good Times and Bad by William O'Neill. And also, if you do decide on that one, get the companion book as well. This gives you guidance on the CanSlim method, but these two books together. And of course, they're available on the website, www.Dallas Trading Floor. So that's that. The little shameless plug for CanSlim trading. Okay, so here we go. Hi, Jim. What screeners and search criteria do you recommend to find stocks breaking out or forming bases? Well, I use a software called MarketSmith, but you can use any number of different screeners. I use MarketSmith, and it's quite a good product. It's a professional grade charting software, so that's what I recommend for that. So, ticker symbol Play. Let's take a look at Play real quick. We're in Play with Play, so let's look at Play. And okay, let's look at Play real quick. And I'm going to start out with the weekly chart. So let's take a quick look at Play. Thanks, Keon. Appreciate it. All right. Here's the thing I have with Play. It is a trending chart. It is trending up, and it has pulled up, but it's pulled back. I think this is a little bit careful. You have to be a little bit careful. This is a restaurant-based company, Dave & Buster's, of course, right here in Dallas, Texas, and casual dining. But here's the problem. Here's what I don't like about this stock, to be honest with you, and that is we're still probably, depending on how the administration works, we're still going to be in a lockdown situation. So I just can't see this as being a very good deal. But let's take a look at the statistics. We have a checklist, and unfortunately, it's only 5 out of 9. So I wouldn't buy that right off. And we have a decreasing fund ownership, so that doesn't look good either. In terms of the restaurant stocks, it's pretty good. I mean, it does, but I think if you're interested in the restaurant stocks, I think you want to go and look at Brinker, which is Brinker International, which has a better chart. And this is the chart for Brinker. also based here in Dallas, Texas, and it has a 91 relative strength. So I think that was one you might want to look at opposed to play. I don't think you want to be in play. It's not the best of breed, and I don't think it's going to do as well as some of the other ones. Okay, what's the best mutual fund to play for long term? Good question. I still think that overall, the best mutual fund is probably this one, FFTY. This is the one I like. It's an ETF. It's a growth ETF. It's off today, so it's not looking as good as it normally does. But let me show you that one, and then I want to show you also. I just want to show you the spider because that's the biggest of all the ETFs. So let's take a look at the spider, and it's if you want the general market, this is the one you want, and it's the spider. This is for long-term of capital appreciation. If you're willing to go long-term, this is probably the one you want. It's the spider, SPDR S&P 500. And it is up a little bit today, but pulled back. Now, this one is doing fairly well. Now, here's the thing. The QQQ is not doing so well, but the rest of the market, the S&P 500 is doing okay. So this is the one for long-term I think you want to be in, and it's the spider. And it's up $3 today. So this one is doing fairly well. So that's the ETF that I like the most typically for long term is the spider. Okay, so all right. What is going on with AMD? Well, we have a rotation out of tech into value and other S&P stuff. So let's look at the chart for AMD. It's looking fairly ugly. $7.89 down. I got stopped out of this one. I'll be honest with you. I sold this one. Basically this morning. I was out of this one. I got stopped out of this one, and it's continued to go down. So I'm afraid that we are going to see a correction in some of these stocks that have been highly rated, especially the tech area. I think there's going to into the end of the year. I think we're going to see a lot of selling, going on in that area. So, not necessarily a good thing. Okay, so let's get some people from TikTok. Thanks for holding on. SNDL. Let's look at SNDL. SNDL. And that is Sundial Growers. Okay, this is one of the cannabis stocks. Here's the thing. I'm sounding like such a negative Nelly today, but the cannabis stocks I just don't think are going to do as good as that good. This is a 44 cents, so this is really a penny stock. Because cannabis is so easy to grow. I mean, it's true with the Biden administration. Cannabis probably will be legalized in all 50 states. But the problem with cannabis is it's incredibly easy to grow, and so there's going to be lots and lots of oversupply. As a matter of fact, in Oregon, they are swimming in cannabis, and they can't sell it because everybody that all their buyers have bought. So it's not necessarily a good thing. So Sundial Growers, I just wouldn't touch this one. It's in Calgary, which is a nice place, by the way. But I just don't see the cannabis market. Why would you pay more? When you could buy, cannabis from somebody on the street at a lot cheaper price. So just a thought. Russell 2000. Okay, the Russell 2000, of course, everybody knows is the largest. That is the most wide. That is the widest index. Well, actually, the Wilshire 5000 is the widest index, but the Russell 2000 index, the ETF, which tracks that, is the there we go. Let's get exactly the right thing here. Okay, so yeah, the Russell 2000 index for the okay, I can't get it. Oh well. Let's see where the Russell 2000. Well, I'll have to come back to that. Unfortunately, I don't have a good answer for you. But the Russell 2000 it's holding up because there's a lot of small banks in it, and but what we have going on now is there is a movement from the tech area, what is represented by the QQQs, into some of the Dow and the Russell 2000. So that probably wasn't a really good answer, but it is. Thoughts on Carnival and Norwegian as a contrary trade? Go for it. You're not going to make any money on it. What's going to happen, as long as the economy is shut down, these stocks will do horribly. But I know a lot of people like these stocks. I don't see why, but let's look at it. Carnival, CAR, I believe, is Carnival. No, that's Avis Budget. What is the symbol for Carnival Cruise? I can't remember what it is. CCL. I apologize. Yeah, I knew it. CCL. CCL and Carnival Cruise Lines. Yeah, I mean, it's up a little bit today, but it's just, you don't want it. This is a falling knife. Why would you want to buy something that is like, why would you want to buy something that is basically moving like that? Why would you want to do that? Why? I don't think that's good enough reason. It's popped up a little bit, but I think it's going to pull right back down. There just isn't. They just don't have any business right now. Let's look at the checklist. 4 out of 9, so that's not good. Ownership, decreasing fund ownership. This is a short. This isn't a long. This is a short. So Carnival Cruise Lines, I can't recommend it. I know that a lot of people really like it, but I just can't recommend Carnival Cruise Lines. Let's look at Norwegian. That's probably a better one, but it's still NCL, Norwegian Cruise Lines. Let's see if what's the symbol on Norwegian. Let's see if I can get. I can't remember the symbol off. Just offhand. NCLH. I apologize. There we go. NCLH. NCLH. Let's look at Norwegian here. Yeah, it's same kind of poor pattern. Not really a place to be. I wouldn't be in this. I think right now, I think the best thing to do is possibly, get into cash and wait for a change in the market. This is not good. Yeah, look at the checklist. The checklist is 4 out of 9. You don't want to be here. You don't want to hear. Here's the thing about the stock market. Everybody wants to buy low and sell high. I know that's what you've heard, and that's a good thing when you're buying groceries. But when you're buying stock, you're buying to resell. So if you're going to buy a dog, it's probably going to be a dog with fleas by the time you sell it. So I would not recommend. I would not. Yeah, I think you're right. I think right now we want to kind of, until we can figure out what's going to happen with this market, I think we want to move to cash. Cash is your best hedge, always. Remember, when you're buying stock, you're buying to resell. So, if you buy low price stock that's going down, usually it'll go down lower. That's just the way it is. So I think it's good time cash, and some careful, and some possibly some value stocks, but cash really right now. Some of the really beaten down stocks. Buy point for NVIDIA. Let's take a look at NVIDIA really quick. NVDA. And I do believe that NVIDIA probably will see a bunch of selling just because it's moved up so high. Now, this is a tremendous stock. Yeah, it's down strong today. It's not really changed direction yet, but I do think that we are going to see some directional change. If it moves below this line, I think we're going to see directional change. Don't buy it into earnings. It's 8 days before earnings. Probably this is going. NVIDIA is probably going to sell off in after earnings. So that's what I'm expecting, even if they have an excellent number. And I do think they will. Their sales have been going right up, and they have, they are doing well. But what we see here, and this is this relative strength line here, it is moving into the downward. It is moving downward. So I do believe I don't know if it's topped, but I can see a lot of people starting to sell this one just because they want to preserve their profits. It's got a 100% checklist though. Everything is right for this. It's not really time to sell it yet, but it's time to be really careful. I would not acquire any more NVIDIA right now. I would be very careful about it. Let's see if it changes direction. If it doesn't, if it just continues right back up, that's great. But it looks as if we're seeing some kind of we're seeing about a $500. It seems to be stuck there. So it could bounce off that and go higher, but it could also move lower. And I think there's a chance. I think there's a chance that it is going to move lower in this market just because of the uncertainty. And it's coming into earnings, so I don't want. Sounding terrible today. I don't want to necessarily. I wouldn't necessarily go into it. Buy point for Apple. I don't. Apple has changed its character, and it's not that Apple's a bad stock. It's just going to readjust lower. So, I will give you a buy point for Apple, but I don't think. Yeah, okay. The buy point for Apple currently is 137.98. It's at 116, so it's below the buy point. So it probably will fall. Now the good part is it probably is going to move. It probably is going to move down to the consolidation base, which is about one. Well, it's going to move lower. It's about 103 is where it's probably going to hold. But I do see this one going lower. I do see this. I do see Apple going a little bit lower and readjusting. Everybody and their brother is in Apple, so yeah, we're going to start to see a lightening probably of the people that are in it. But it's still a great stock. It's just it's moved up and up and up, and I do think that we will be pulling it off. If you've got good profits in Apple right now, if you've brought it up, if you have good profits in Apple, I would consider selling at least half of your position. Make sure that you don't do a round trip on your profits because profits are hard to come by, and that's why I'll be selling some of my stocks probably into earnings. What about Joe? Went up a bit more. Okay, Joe. Is that Joe Boxer? Let's look at Joe. Joe. Oh, this is St. Joe. Yeah, this one actually might do well. Yeah, St. Joe. Yeah, okay, this makes sense. This is a resource stock, folks. Very good. Thank you very much. Thank you. Thank you for this. This is the kind of stock that probably will do well going forward. And this is St. Joe's company, and it's one of the largest owners of land in Florida. And so I do think that this one it's 30.98. So let's look at this. This is a good call, by the way. 100% checklist. Yeah, this is excellent. I think I'm going to put this one on the watch list. Thank you very, very much for bringing this up. This is a good one. This is a good one. This is a good one. St. Joe Company. It's got solid earnings. It's got everything. Earnings per share is up. People are moving to Florida. They're trying to escape from New York. So I do think that was good. Thank you very much. That's Original Monkey Parts. That is great. Thank you, Original Monkey Parts, for that. That you're right on. You're right on. That is a buyable stock right now, and I think it's buyable right at the 21-day exponential. Is about 28. So if this thing pulls back a little bit, and it may not pull back all that much, because it's moved through its first buy point with a cup and handle at 22.36. So, this is a buyable stock. So thank you, Original Monkey Parts. That's pretty excellent. I think Joe, I agree with you. Joe's good. Tesla and Amazon. I think that we're going to see some weakness in Amazon just because it's come up so much. I think it's going to pull back a little. I think a lot of people are going to sell it just because they have made so much money. And yeah, it is down a little bit today. But of course, one day does not make everything. But let's look at the daily on it to see how much it's pulled back. Yeah, it's pulled back below the 40-day line. So that's significant. It's downward trending. This is also downward trending for the relative strength. So do I see Amazon? I see a lot of people possibly selling Amazon. This may be a very good short. It looks as if there's I don't know if this is true. Let's look at the weekly to see if we can find if this is a shortable stock. I don't know if it is. No, it doesn't really look shortable yet, but this is Amazon's probably going to be coming down a little bit, unfortunately. I think with Tesla, it's forming a new base. But let's look at Tesla again, TSLA. I was shaking out of Tesla, and unfortunately, it's at 408. Tesla is going to be moving a little bit lower for a while, I think. It's just one of those things. So let's look at the daily to see kind of how it's trading. And we are below the 40-day. So yeah, this is kind of significant here. This red line here, this is the 40-day line, and when you go below that, and you stay below that, that shows a change in direction. It looks as if we went down, we've retraced up here, but I'm afraid right now this is the direction of the issue. So I do see it's moving lower. Let's look at the weekly to see. Yeah, it's sort of in this range here. I think we've got I think it's sort of topped out, and it's going to be consolidating a little bit. So, yeah, unfortunately, at least for right now, the Tesla move, it seems to be tempered. So it seems to be not moving as well. Okay, is SQQ the way to go daily or cash out every day? You know what, I would cash out every day. And here's why. Chris, that's a really good question. The SQQQ only works when there's an overall change in the direction of the market. And what do I mean by that? Well, the SQQQ basically shorts the Qs. So if there's a change in direction, that's when you want to buy the SQQs. Unfortunately, I believe with the Qs, the direction has already changed. So I don't see that there's going to be as much benefit from that. I think that you want to go to cash right now because because I do foresee a directional change. Now, we're still in a confirmed uptrend. But I think that we're going to see a rotation out of tech into some of these other issues. I really believe that. So I think that's kind of the way it's going, unfortunately. All right, Alibaba is over. Well, I don't know. Never say never. Never say never. One day does not make a. One day doesn't make anything. But it's the kind of thing where sometimes. Sometimes sometimes it goes that way. So, let's take a look at some of the other stuff from TikTok. So Alibaba, yeah, Joe's asleep. Right. Okay. It is kind of asleep, but that's good. Okay. Thoughts on BA? Let's look at let's look at Boeing, BA. So I'm gonna bring up BA. Yeah, it's pulled above the 200-day line, which is significant for which is significant for Boeing. So I'm going to kind of show you the chart here on Boeing here in just a sec. There we go. All right, so it's pulled above the 200-day. This is good. Maybe they're seeing a change in trend. I don't think though. I think though that this is a rally. I do think this is a shoulder here. I do think this one is a shoulder, and I do think it may move up a little bit more, but I do think it's still headed down. I just don't see it with the COVID thing. It's got a terrible checklist. I can't get behind this one just because that is the trend. I mean, even though that is the trend right now. I mean, even though we've pulled up to the 200-day line, which is a good thing, if you'll notice, sometimes it pulls up and then it pulls back. I think we're going to see a pullback on Boeing, so I can't really recommend Boeing either. Boy, I'm not recommending anything. But I do like St. Joe. But that was an excellent suggestion, by the way. What do you think Tesla will go? I think Tesla's going to go a little bit lower, Wendy, unfortunately, at least for right now, at least in the short term. Okay, so where are you getting into right now? I'll show you what I've got currently in terms of my portfolio. and this is a small portfolio. I have another portfolio as well, but this is the one I kind of have all ready to go. So let's kind of show you where I am currently in this. All right. Well, that's the wrong one. So I'm just going to go back here to the small portfolio. Let's see how we're doing in that. So let's kind of go back there. All right. Pop over to there. And that's right here. There we go. All right. It should draw the chart here in a second. Okay. There we go. Okay. It's coming up now. There we go. And as you can see, I'm starting to move back into cash. I was moving out of cash. It was looking so good, but now I'm starting to move back into cash. So I suspect I will be out of Palantir. I will take my profit probably tomorrow, and then I will probably be selling. I don't know if I'm probably going to be selling Imphy too. So I'm going to be moving probably to cash mostly. So that's kind of where I'm at currently. You know, I moved a little bit out of cash, but now kind of I'm looking out. I'm kind of like the groundhog. I'm looking around, and it looks like it's still winter. So I may be going back inside for a while. Okay, Baba and Imphy, your thoughts. Let's take a look at Imphy. And again, I'm in Imphy. I'm in Imphy. I do think that that's likely to stay only because there was a buy order for it by Marvell Technologies. They decided they're going to pay 157. They're going to pay 157 for Imphy, but let's okay. Okay, it's not coming up here. Sorry. All right, so I want to make people understand. And one thing, absolutely. Well, absolutely, Turkey 424. You could definitely make money in trading in the market, and that is a good thing. So yeah, if you're interested, just give me a call. The number here in Dallas is this number. It's 214-233-5087. So if you're interested, that's the way to go. So let's take a look at some other questions. You said, okay, you said last week that the market is bullish. Absolutely. I think it is bullish still, but there's a rotation out of tech into many of the Dow stocks. So a lot of people are selling that. That's why the overall market levels haven't gone down, but they're moving from tech investments into some of the beaten down stocks a lot of them are in the Dow. So that's kind of what I think. VOO long term. Okay, this is the VOO is similar to the spider, so this is kind of a similar play as to the spider. This is the one by Vanguard as opposed to State Street, which is the other one, but it's the VOO, and that is and it's good. I mean, it's up today $3, so it's doing pretty good. The spider is doing good. It's the damage is mostly in the QQQ today. It's mostly in the QQQ. The spider is doing quite well, but the QQQ isn't. So this is a good, the Vanguard S&P 500 ETF. This is a very good bet. Absolutely. If you and in times like this that are a little bit more challenging, one of the great ways to do it is to buy an S&P 500 ETF. Anytime the market is in a confirmed uptrend, and it is right now, buy the Vanguard S&P 500 ETF. And then if the market condition changes, and I do show this every day on my charts, then if the market trend is up under pressure, you want to sell half of it, get into cash, and then keep half of it. And then if the market then moves into correction, you want to sell all of it and then wait for it to come back and move up. So if you do this, you will probably outperform the overall market, and a lot of people, especially in a down market. So the VOO is a very good long-term thing. But here's the thing about the VOO, and this is why I tell you about this. You want to capture only the upward motion. You want to capture only the upward motion, and not the downward motion. So that's why you go into cash when the condition of the market changes. So that's a way to increase your likelihood of being of being right. So this is the leveraged ETF. This is the Direction financial bull, and it's up today significantly, $9. Wow, 48 cents. So this is definitely definitely this is saying, and I think this is true, that we should see some good movement on the financials. So the banks probably are going to do better under this administration than they have in the past. So the new administration coming in, they're probably going to do a little bit better. So do expect some movement out of the techs into some of the finance stocks like J.P. Morgan. So let's look at J.P. Morgan just to see for fun. JPM. This is probably one of the best of the money center banks, and of course it's up today. Yeah, that makes sense. That makes total sense. We're going to see reinvestment in it. Let's look at Bank of America. Let's see if there's any way to make any money on that. BAC. Let's just see. Yeah, it's up today too. Yeah, all the banks are going to be up today, and I suspect they have going to move above that 200-day line. So even though their sales have been weak, I do think that they're probably going to do better into the next year. So that's maybe where we want to move from tech, possibly into some of the bank stocks. So it looks like that may be a good place to go. Well, I have wasted another hour of your time. Thank you so much for for joining me today. I'll be back tomorrow at 2:30, and of course I'm available all the time on the podcast. They're on Anchor FM. So if you want to see any of the podcasts, they're at www.anchor/FM and .com. And those are all the podcasts that we're doing now. And of course, also, if you are looking on YouTube, would be I appreciate it if you would subscribe and like me. There you go. There it is. And until tomorrow, I'll be back at 2:30 Central. Happy trading.